So today we are going over what is not what is, but we're going over. Sorry about this fucking camera quality, guys. I'm so fucking sorry about this shit. This is not okay. Look at this. Look at this. Look how bad. Look at my face. It looks like GTA fucking 1. All right. Sorry guys. Enough joking around. Um yeah, so let me get started. The first thing I wanted to show you guys is the fact that um we are talking about technical analysis today, and specifically what you need to do as a trader, whether you're a new trader, whether you're an old trader, doesn't matter to me. So the first thing we're going to do is talk about the difference between technical and fundamental analysis. All right. So fundamental analysis, you probably heard that. That is basically the study of intrinsic value, right? So by intrinsic value, I mean real world value, the real fundamental value there. That's why it's called fundamentals. Where are the underlying um, compounds slash factors that affect the market? So if we're talking about USD, Japanese yen, right? There are two pairs and two currencies in that pair. Sorry, one pair. There's one pair, USD JPY, and there's two currencies within that pair. Each currency has its own micro and macroeconomics. We're not going too deep into that. So the fundamental analysis is the macro and microeconomics that are powering um, the USD JPY pair. So the reason um, the markets move is because of economics in the Forex market. But we're more of technical analysis traders. So we focus on the study of price action versus the fundamentals, and which I do carry fundamental knowledge and how to determine that. But my strategy is mainly smart money and also just technical. So my focus is on the charts rather than what's going on in the news and stuff. Because a lot of times, if you guys look at the news, there's this whole thing: buy the rumors, sell the news. A lot of times, when they tell you the news, they're already telling you what's already happened, right? And so by doing that, by the time you try to implement those into your trading, it's the move has already been done. So that's also why I don't read a lot of news, because when you wait for news and then trade, the trade's over unless you're waiting for a correction. But here's the thing. So on the charts right now, I'm gonna zoom in this. We are currently on GU. And so if you're a new trader, if you're a Forex trader, I'm pretty sure you're a new trader if you need to know what fundamental analysis is. Sorry, what technical analysis is. Um, Sorry guys, I'm just trying to fucking put the damn. You can fast forward any of this part. You can fast forward this. I'm trying to actually put the camera back on over this, but it's just being a fucking piece of shit. So just give me 2 seconds. All right, so we are currently on GU, okay? And currently the trend is bearish. Why? Because if we zoom all the way out, and you guys know the way I mark up my trends, it's going down, obviously. And specifically because I used a 30-minute time frame, generally for market structure, or the 45-minute time frame. And so I'm actually going to go and zoom in, because if we look in, because we're zoomed out right now, right? And if we pay attention, where's our structure that's maintaining the trend of it being bearish? Because people will do trend lines, but they won't actually show you structure. Market structure is more of how the market actually works. So trend line, people will draw something like this, and they'll draw maybe like a line right there. Sorry guys, it's so laggy. They'll draw like a line right there, and that will be their trend line. But we don't do trend lines anymore. We do market structure. So you see those horizontal lines on the screen that are right here, where the arrow is pointing to, the gray arrows specifically. We see that high, we see that previous low, we see that previous high, and we see the present current moment low that's happening right now. This is the current low. So if market structure is going down, I'm probably going to be buying, right? I'm probably going to be selling, right? And so if I'm selling something to make the most money in Forex, it makes more sense to sell at the top of the range, specifically up, because the higher you sell, the more money you make, because we're selling from a higher point. It's like diving. The higher you dive, the more, there's no money involved, but it's like the more money versus like diving close to the water. You get a bigger dive. And the bigger dive, the more pips, because we make money from pips. Each percentage of movement in the market is a pip. And so each movement, each tick a price, we make money if you're in a trade. And so guys, right now I want you to pay attention to this current range. And what I mean by, again, the current range is the current gray and the gray arrows, the two gray arrows that are pointing towards those yellow lines. All right, so this would be our current range right here. And so if we look here at the current range, we can see a high that the gray arrow is pointing to, and we can see a low that the gray arrow is pointing to. Now, since I'm selling, I want to sell at the top part of the range, so it doesn't have to be the tippy top, but it needs to be the top area. And so if we take a tool called the GAN box tool and we drag it across the screen like this, right? So I'm dragging it from my high, which is that yellow line, to the low, and if you notice, there's 3 green lines that appear here. And if you look at those 3 green lines, this is supposed to basically represent, it's supposed to divide the range in half. That's why I use this tool. It's called the GAN box tool. GANNBOX, GAN box. It's 2 separate words. I sell at the top part of the range because my areas of interest that I'm interested in making money from and taking trades off of are going to be at the top part because we're selling. And so write this down. When we're selling something in the Forex market, we always want to be selling something, and I have to talk to you guys like you're 5 years old because this is the best way people learn. Even if you don't like being spoken to, trust me, it helps because it makes everything seem easy. So what I'm going to do is I'm going to write this down. I want you to write this down. Please write this down. I'm literally going to jump through the camera if you don't write this down. If you don't write this down, I'm going to jump through the camera. I'm going to jump through the camera. All right, so here we go. Sorry, guys. So you want to write this down. You want to write down premium price, and you want to write down equals high area / price. And then the discount price is when we're buying. So when the trend is bullish, we want to buy low. All right, so discount is, it's just like when they say buy a dip. When you're buying any dip, you're ideally buying something at a cheaper price. So if I want to buy Microsoft when it's at 100 and then later it goes to 700 in price, right? That 100 would be the dip because that's where prices are cheap. It's dipping where prices are going down because the chart is a reflection of price action of the price. It's a visual representation of the price. So discount price, and then we want to do equals low area, okay? So discount price equals low area / price. So we're going to write premium price, discount price. Write that down. Write down what I just wrote, or you can screenshot this. You can do whatever you want with it, but just write this down. So premium price equals high area / price. Discount price equals low area / price. And I'm going to keep saying it because the more I annoy you like this, the more you're actually going to learn it because you're like, oh, I'm so sick of hearing it. And then you learn it, right? So stop complaining. All right, so, and no, I'm not on drugs, guys. I like to be engaging and not some robotic person when you're learning. Because if I'm like, hey, guys, what's you guys, it's boring. Who cares? Like, no one, it's more entertaining. And also, you learn better when teachers are like this. Trust me, the ones in school that you liked were always like this probably. Or they have to educate in a fun way. But yeah, so right now, price action, if you look at the current price, you can clearly see that the market, the market came up where that gray arrow is pointing to that I'm just drawing on the screen, that big ass gray arrow on the right side. Price, you can see, came up to over that middle green horizontal line, which is right here where you see that 0.5. The arrow is pointing towards it. All right, that gray arrow, 0.5. That's where price is divided and balanced. Above this green line is where prices are expensive, and below this green line is where prices are cheaper. Hence, why you see all the green price action below the line and all the red mainly above, because that's where all prices selling off from. And so right now, price came to that area, which I like to call a supply zone, where prices sell off, demand, or supply and demand. So that gray box that you're looking at, that the arrow is pointed to, that gray box is our demand, our supply zone, okay? And that is where price is currently reacting off of now. And you guys see how price came right up to that box and then is now, as we're speaking, GBP USD reversing and going downwards. That's because it came to a expensive area before going back down. And I'm not making this video too in depth, but I wanted to show you guys something. Now you see those wicks that are kind of stabbing the gray box. Those wicks. If you're a Forex trader, you should know what the difference between candle bodies and candle wicks are. So candle wicks are those little lines that are sticking up from it, that are sticking up from that. Okay, so when you're doing market structure and you're doing technical analysis, a key thing you guys want to have is your confirmation checklist. And now I'm going to play this next clip, and I'm going to tell you guys what a confirmation checklist is. Okay, so watch this clip real quick. All right, guys, so what you're looking at is my dirty notebook. I have a bunch of dirty shit in here. So this is my confirmation checklist. Yes, I know it looks like shit. I just wanted to go over with you guys some of the steps that I usually do. The first thing I always start out with is mindset, because mindset is always important when you're in the market, because if you're angry or if you're in a bad mood, you're sad, it's going to affect how the charts are. It's going to affect how your charts are. And that will not do well in your trading. And it will also lead you to make emotional decisions and enter trades that you shouldn't, and therefore ruining your risk management. Your structure, of course, is the trend. Is it bullish or bearish? And once we know that, then obviously we can start identifying our actual areas that we want to trade, which is the range. Because I specifically trade, I trade an institutional strategy. So I only trade ranges when there's a range, when there's volatility in the market. And so the step 4 would be, after I find my range, which has to do with market structure, because when there's volatility in the market, it creates the range through price movement, because volatility is essentially how much it moves. So if it's high volatile, it moves a lot. If it's low volatile, the market barely moves, and we need the market to move to make money. So define POI. POI just stands for point of interest, so areas that I'm interested in trading in. I'm not going to go through all of them, but I just wanted to let you know that like the first 5, 6. Next is set alerts. So actually set alerts to where your area that you want to trade is. So just set alerts there. And yeah. So 6 is, what am I looking for and where am I looking for? So that basically has to do with once you have your alert set, what are you looking for at your alert to happen? Or what are you expecting to happen? And yeah, guys, this is just some quick little and of course there's more steps I have, but these are more in depth and more have to do with more in my strategy. So I'm only just gonna share these, and if you want, you can take a look at these too if you want. You can screenshot that, do whatever. But yeah, guys, let's go back to the charts. All right, guys, so I hope you guys watched that clip. And so basically you see why it's important to have a confirmation checklist, because you want to have all of your confirmed steps to enter a trade. It helps you have an actual system, so you're not just taking and flaking out on trades because you were emotional. Maybe you thought it was going to continue going to the direction it was going to go into. And having a confirmation checklist enables you to be more successful, because it structures you around discipline. And when you're structured around discipline, you have a system, and specifically in the Forex market, you want to have a system because these systems are what make you money. Your trading strategy is a system. Your confirmation checklist strategy is basically what secures that system. So your risk management is always going to be at the top of the pyramid. The base of your pyramid, your foundation, is going to be your confirmation checklist, your whole strategy. And then the risk management puts everything on top. And so in technical analysis, a couple important things are your confirmation checklist. So all your confluences that you're supposed to look for, your steps. I don't care what strategy you're trading. You can trade a different strategy to me that works for you. Is your trend line where it's supposed to be? Is your whatever you're trading? Because I don't target one type of trader. I'm friends with different types of traders that have different strategies. So whatever strategy you're using, make sure you write down all the steps before you enter a trade. This will help you develop discipline. Also, on your watch list, I know I have a lot of pairs. I don't trade all these pairs, but only try to have like 5 to 10 trading pairs. I would say 5 to 7 pairs, but every Sunday, switch out those pairs and only choose pairs that have clear market structure. So pairs like this. So like on the 30-minute, which is what we use for market structure, you can clearly see that the market is going down because we have lower lows, lower highs. And we want a bullish trend. We want higher highs, higher blah, blah, blah. Higher highs, higher lows. So yeah, guys, that about wraps up today's video. I hope you guys found some value out of this. If you want to watch more of my stuff, let me know. I'm always on here, guys. I love doing this stuff. I love sharing what I've learned, my experiences. But this wasn't a really in-depth video, but I wanted to make this quick. But yeah, guys, peace out.